and welcome to the Of Interest podcast. I'm Gareth Vaughan from interest.co.nz. After a couple of years of surging house prices, things have slowed down dramatically in the housing market this year. The latest monthly Real Estate Institute of New Zealand House Price Index for July shows house prices down 11% from a peak last November, with prices now back where they were in May 2021. So what is going on in the housing market? To discuss this, I'm joined by Shamubeel Eaqub, who is an economist from Sense Partners. Hi Shamubeel, and welcome to the Of Interest podcast. To kick us off, could you give us an overview of where you see things in the housing market at the moment?
Well, I think the best description is a sudden stop. We went through this spectacular 2 years through COVID when lending was strong, sales volumes surged, prices surged, and then once interest rates started to increase and those lending criteria tightened, all of a sudden everything just flattened off. So right now we've got house sales that are at lows that we normally see in recessions. House prices in the last 6 months have fallen at the fastest pace ever for the RINES data. So that gives you, I think, a feel for just how quickly things have turned off.
Yeah, one of the questions we have been hearing quite a bit of and talking about in the office is this different from other downturns? And I mean, downturns, they all do differ. There are slightly different reasons for them. But I guess the last significant one we had in New Zealand was post-global financial crisis, I guess 2010, 11, 12 period. How does this feel compared to then? And I mean, how bad might it get?
History doesn't repeat, but it rhymes. So I think there are some similarities in that the underlying drivers are much the same. Confidence has evaporated. Mortgages are harder to come by. But I think what's really different this time compared to the global financial crisis is that we don't expect interest rates to suddenly come down like we did during the GFC. So yes, we had a downturn while interest rates were extremely high. We had a recession and the Reserve Bank cut interest rates, slashed them. This time around, I think because of the underlying inflation pressures in the economy, the Reserve Bank is going to keep raising interest rates. And that is very different. Despite a falling housing market, despite very low confidence in consumers and businesses, the Reserve Bank is raising interest rates. This is unprecedented in housing cycles. It's very rare that during a downturn, we see interest rates continuing to increase.
And obviously, against that, we've now got banks cutting mortgage rates. So, I mean, it's we're sitting here speaking a couple of hours before the Reserve Bank is expected to increase the official cash rate again by another 50 basis points. Banks cutting fixed-term mortgage rates. What does all this mean? I mean, what is one to make of what's going on?
Well, I think it's that difference between the quantity of money and the price of money. So you're absolutely right that the Reserve Bank is raising interest rates, so floating rates in the short-term fixed terms will go up. But those longer-term rates are really decided by what's happening in global markets. And there is a lot of uncertainty in global markets right now that the global economy might be in recession. So long-term interest rates, swaps, and hence the cost of borrowing for banks for long-term have fallen. But I don't think it's easy to get those mortgages. So yes, you're absolutely right that the price of mortgages is coming off for some terms. But actually, it's really hard to borrow money. Banks are very reticent and reluctant to lend. And I think that matters a great deal. If you can't borrow money, you can't actually buy a house. There are very few people in New Zealand who buy with 100% cash. Most people will be borrowing money. And because the banks are so reluctant to lend, those lending criteria are much tighter, I don't think we're going to see the benefit of these more competitive fixed-term rates really affecting the housing market for some time.
If we just go back a bit, I mean, the media headlines at the moment are pretty doom and gloomy. Market down X% and sales down, volumes down X%, all that type of thing. But it wasn't that long ago, 2020, 2021, where the market was absolutely crazy and sales volumes were massive, prices were soaring. So are we just giving back a bit of those crazy, was it 40% roughly over 2 years that prices went up by? Are we just giving back some of that?
We are. So the last 2 years, just extraordinary, right? I remember when COVID first hit, there was all this forecast for how much house prices were going to fall by because of COVID and all that stuff. But of course, the floodgates opened on mortgages, on interest rates reductions, and the housing market absolutely boomed. And that 40% increase was so big that houses became extremely unaffordable relative to incomes. So I had to extend my chart of house price to income ratios because it just wouldn't fit anymore, right? It became that expensive. So you're right in that we are giving up some of those gains, but there is a lot of psychology that's involved in the housing market. When things are falling, people expect things will keep falling. And that can become a self-sustaining cycle. And I think that's the fear right now. And that's probably what's driving a lot of the headlines, that things are falling, things are trending down. This trend must be the thing that goes on forever. No.
That's, fear and greed. They are the two things that people say drive markets, financial markets, housing markets, etc. And obviously, people here would talk about FOMO, fear of missing out when the market's really hot. And with that fear in the ascendancy now, what would it take to turn it back to greed?
Well, I think there's still a lot of greed out there, but that fear is more to do with I can't borrow money. And I don't think there is still a fear in the New Zealand psyche that house prices will fall in a sustained way. Just because we've had, the experience since pretty much the early 2000s that house prices only really ever go up. And even when they fall, it's only for a short period of time, right? Now, it may not be the case this time, but I don't feel like that fear is as widespread as it was, for example, in the US when prices were falling during the global financial crisis. So I think there is still a lot of greed out there. So when houses are selling, they're still selling at pretty high prices relative to valuations, which surprises me given how weak the housing market is. So people are still paying reasonably high prices. I think the biggest issue right now is ability to access mortgages. And when banks turn that back on, which is going to be related to the Reserve Bank easing up on conditions if they do, I suspect that would be the lever that would create the most impact in terms of house sales going up and prices going up again.
That could be some way off though, couldn't it?
I don't think it's going to happen for a long time. I think the last 2 years have shown just how irresponsible we were in terms of the banking policies. COVID was never going to kill houses. And yet, if you look at the credit creation that happened over the course of the first 2 years of COVID, it was all to housing, and lending to businesses and farms fell. We knew that it was going to be businesses that would have failed from closures and restrictions. And yet the Reserve Bank misdiagnosed the problem and flooded the housing market with money with predictable results. And as a result of that, I think they're going to be very, very reticent to open those floodgates back up again. And certainly I think the political environment has shifted completely. If they do it again, I reckon the Reserve Bank's independence and the way it operates will come under heavy scrutiny and change.
That's really interesting. And I think you're sort of getting to the heart of the issue in the last couple of years with the COVID housing boom, and just why. I'm curious as to pick your brains on why you think the problem was misdiagnosed so badly, because I remember back in if you go back to March 2020, and to be fair to the RBNZ and the government and people having to make the big decisions, it did feel like the world was ending. I mean, the US Treasuries market was basically bailed out by the Fed. Things were pretty grim. We had this virus spreading all around the world. We were seeing horror footage of Italy and the UK and Iran and various countries and the damage it was doing. So there was a lot of worry out there, and I guess quick decisions were made. But why did people think the housing market was going to tank? And as you say, I mean, the everything that was done, cutting the OCR to 0.25%, getting into quantitative easing, removing loan-to-value ratio restrictions, all these things were designed to boost the housing market, or at least that was a side effect of those things. Why did we go down this path?
Let me answer it this way. Hindsight is 2020. So sitting here, New Zealand went through this pretty well. It feels pretty comfortable to criticize those decisions. So I think it was made under a lot of pressure. So we need to have a little bit of context around that, and you're absolutely right. But the second thing was really around how the Reserve Bank thinks about financial stability. The Reserve Bank's main fear was that the banking system would come under so much pressure that it would create a cascade of failures and those kinds of things. So I don't think there was much science behind why they went down this way other than to prevent a lot of pressure on the banking system. And you would have seen things like the way that they lent preferred money to the banks and things like that. Everything was designed towards keeping the banking system liquid, operating, and as immune from big reductions in price falls and failures as possible. But I think the other big thing that came through was just the psychology. I'd say, across the public service, we're hung up in the 1980s. We still think that as little intervention, as little government guidance as possible is the best way forward. And so there was a real resistance towards saying that we're going to give all this money to banks or all these preferential treatments, but we're not going to tell them what decisions to make because banks know best. So that's a very 1980s style thinking, and I think one that is now fit for the bin. We can't keep doing these things anymore, because what we should have done is said, you will only use it for low-income households. You will only do it for businesses. You will only do it for farms, because this is really targeted towards preventing those mortgagee sales and preventing business failures and farm failures. It's not for propping up middle-income New Zealanders to buy and sell houses from each other at ever higher prices, which is what happened. Now, I think you can't get away from the fact that there is a big culture problem and intellectual problem in Wellington.
Interesting. And I guess, do you see any signs that that's changed or that people are learning? I mean, as you say, hindsight is a wonderful thing, and we're sitting here in August 2022 looking back. But do you see any signs that mindsets have changed or people are learning?
I think these changes will be forced upon them. So there is a myth that goes around that central banks are independent. Of course they're not. They're products of legislation and government. There is a myth that somehow the economists at the central bank know more than other people. Of course they don't. They're human just like everybody else, but they have a building full of very smart people. They will learn to do things differently when they're required to do things differently. And do I think it's changing? I think we're seeing the beginnings of change. So the change of the governance structure, the change of the way that we do the policy targets agreement and those kinds of things. These are not perfect, but what they tell me is that consensus of that inflation setting era has ended and we are groping towards some kind of new thing. What that new thing is not decided yet. So the course of the next 10 years is, I think, when we're going to see the Reserve Bank forced to reckon with a different way of doing things. And we're not alone. Look at the review that's being done in Australia, what they're going to ask for in the UK. This is happening in a wider scale because the way that we have done central banking, the way that we have done management of the economy is no longer fit for purpose.
It's really interesting, and this will have, I mean, we're on a little bit of a tangent here, but it's a very interesting one. So if we sort of circle this back to the housing market, I guess what is this going to mean for housing?
Well, what it means is that the very preferential treatment that housing has had in the banking system is nearing its end. So when it comes to things like the capital adequacy, the way that banks have to hold capital for mortgages is vastly more preferential than lending to almost everything else. So it's not surprising that we created those incentives that said, banks, go and lend to mortgages because they're safer. And they did. And it's more profitable. But once you start to shift the dial, we will start to see credit flowing away from mortgages to other things. So I think for the housing market, it's really this big shift where we've been through probably the biggest, longest period of liberalization, easier access to credit that we've ever had. That has come to an end, and we're not going to see it going the other way. So it becomes a headwind. The banking system and credit policies become a headwind for the housing market for the foreseeable future.
That's going to be an interesting change. I mean, if you look at ANZ, for example, which is our biggest bank, I think 70% of their lending book is now in housing. So shifting that, giving them incentives to shift that, it's not going to happen overnight, is it?
And I don't think we want it to happen overnight, because if it does, you create this massive gumming up of the system and potentially very big house price falls. But I think what we're going to see is banks themselves and the regulators are going to ask that we do things differently. And it's not happened yet, right? It's still to come. But if you look at the way that banks are behaving, they've become very cautious in terms of lending to mortgages, right? All of a sudden, the property that they would have approved you for heaps of money last year is no longer possible. And so these shifts might be cyclical, but I think it's actually more structural in nature. And so it's already starting to happen in that banks don't think that there is another group of people who are there with sufficient incomes to be able to pay for these things. And, we've seen so many other things that are happening in the backdrop, right? So things like the challenge interest rate. We're starting to see more focus on, don't let the banks just decide on by themselves. Actually, there's some scrutiny on that. What sort of incomes do you actually have to be able to hold a mortgage? Those things were left up to the banks because we trusted them. Can we really trust them to do those things? And so as these things shift, I think these small things cumulatively will mean that it will be harder for people to borrow money. So no, I don't think we're going to see a sudden shift, and I don't think banks are capable of that sudden shift. If you think about business lending, it's so hard, right? It's about relationships. It is about understanding industries and locations and export markets, and hell, it's hard work. We haven't had that capacity to do that kind of business lending in New Zealand for nigh on 40 years. So it's not like we're going to be able to make this shift quickly. But is it a good shift and one that's necessary? The answer is yes. Is it a good thing for the housing market? No.
It's really interesting. I mean, you started off at the beginning talking about how the housing market is, when times are good, it's driven by confidence, and the confidence is gone now. So I guess this long-term change that you're talking about here, what's that going to mean for confidence? And I guess, people talk about how elections, for example, we have a 3-year election cycle. If if house prices are rising, then the incumbent government gets re-elected because people feel wealthy, homeowners at least feel wealthy, and there's still a majority of people own homes. So how does it all tie in with politics, I guess, and the general confidence across the population?
That's a really good question and a tough one to answer. Because about half of adults are now renters. So it's very finely balanced, but of course not half of voters because young people tend to vote less. So that balance is slowly shifting over. And we are going to, I think, see much more fragmented politics regardless going forward. And the reason I say that is because it's not just the kind of the division between renters and owners, but also between generations. So if you think about, the big reforms that we saw in the 1980s, the boomers were the largest proportion of the voting public. And so their issues, their concerns dominated the political center. There was a political center. Fast forward to today, there is no one dominant generation. It's very evenly spread across many generations. And that means there is no kind of median concern. Do you know what I mean?
Yeah.
It's just a range of concerns that are quite fragmented and balkanized across our population. And that means the approach from a political parties, which is still about trying to find the center, there is no center. And I think that is why they're finding it so difficult to appease their fragmented basis when it comes to their political supporters. I think what it means is we're more likely to see changes of government more frequently going forward than we have seen in the past because there is no big center. And for the housing market, I think that means that policies that one government creates may be undone or doubled up depending on which way the wind is blowing, right? So I feel like there is a lot more regulatory and political uncertainty when it comes to housing than we've ever had before.
Okay, we'll stick to the political theme a little bit here. And I'm going to ask you, if you were the Prime Minister or the Housing Minister, what would be your priorities for housing? Or alternatively, what is your housing policy wish list?
Well, I have a long wish list.
I'm sure.
They're outlined in Generation Rent.
Yes.
None of that is out of date, with the exception, of course, that we're actually making progress on many of these things. So before we get to the wish list, if I can just focus on just some of the things that we have achieved in the last kind of 10 years. And it's not about governments in power because some of it started under National and some of it has been carried on by Labour. So I think there is a consensus across the political spectrum that there is a problem. And now we're fighting about what the solutions are. To me, that's a really optimistic place to be when it comes to the housing market. We've seen changes in the Auckland Unitary Plan, which has led to significant increase in supply, diversity of types of supply in terms of more medium density, high density, places that are infills, places that are greenfield. So we're seeing really good progress. We've seen changes in the Residential Tenancies Act. It's not perfect, but it's heading in the right direction. Recently, we saw an announcement for build to rent. Again, it's not perfect, heading in the right direction. We're building more state houses. Very, very good, because we have a massive wait list of over 25,000 households that are waiting for social housing. So I think we're heading in the right direction in that the balance has moved from apathy towards action. And we're arguing about what are the best solutions. But if I had to have my pick of the things that I really like to see, the first is actually a land tax. We have to stop fluffing around and actually tax land, because the reality is that's one of the biggest, strongest signals that we can send that land is valuable. And if you're holding a big piece of valuable land, you got to pay tax on it. So that's probably the biggest kind of policy that I would like to see.
So that's effectively aimed at land bankers.
But for everybody, I think it's shifting the balance of the way that we tax things.
Right.
So it's a pseudo wealth tax. And because most of our wealth is in fact held in land, and most of the frictions that we see in the housing market are in the land space. So if we could just really kind of get into the heart of that, I think that would be great. The technical things that I'd like to see is really around, much more freeing up of consenting, much more freeing up of land supply, infrastructure funding and financing, all the usual things that people talk about. The thing that I think is hard to kind of get across is the housing market is really complex, and there are lots of interrelated levers and factors that work together. And there is no kind of one thing that you can do that would make things better.
That's a good point. In terms of construction, what we're building, where we're building, how much we're building, what are your thoughts on that at the moment? I mean, consenting has been running pretty high, but appears that it's probably peaked now and maybe it's going to fall away quite a bit. How do you view that?
Well, the context is we underbuilt for about 4 decades, and we underbuilt by cumulative about 500,000 houses. So we actually need to sort of build at about 50,000 a year for about 10 years to catch up with what we didn't build. So we're not building fast enough, and it doesn't look like we'll build fast enough for long enough to catch up. The second thing, your second part of your question was, are we building the right things? Sort of. We're moving towards that medium density and all those other things. So it's about choices for people. It's not saying that you must live in an apartment or a terrace. It's just saying that it's available. If your price point or your lifestyle allows, then you've got options and choices. And that, I think, is a good thing. But I think what we're missing is the types of people who can live in these places, because most of the housing is still supplied for people who are owner-occupiers rather than for people who are renting or people who might need affordable housing. So I'd like to see a much greater focus on public housing, whether through Kāinga or through community housing providers. I'm agnostic. I'd like to see inclusionary zoning, which is really about saying that when you zone new land, because you're giving a gift, a planning gift, right? A massive uplift of value and property rights for that piece of land, we should ask for a return of some of that public value in the form of affordable housing. And I think we need to really target supply of rental housing, because there is a rental crisis out there. And this, even though we're building so many homes, the reality is that there are places like Gisborne where the rental stock is shrinking. The population is growing, the rental stock is shrinking, with predictable results on rents which are rising at 10% plus for a number of years. So unless we can get, I think, a bit more deliberate about where in the housing continuum the supply is, we're not actually going to make people's lives better for a long, long time.
In the run-up to COVID too, we had a lot of population growth. Obviously some of it just people having children, sure, but also we had a lot of migration. That stopped with COVID. And I guess one of the views in the run-up to COVID was that was a big driver of our high house prices, because everyone, coming into, say, here in Auckland from other parts of New Zealand or overseas, they all need somewhere to live. That was quite an extraordinary side of COVID, I thought, which possibly hasn't been talked about enough. But if we do have strong migration again in the future, what's that going to do to the housing market?
Yeah, look, I think the 2 years of COVID showed us that we don't need help from immigration to increase house prices, right? We're fine without any outside help. But if you look at the context of, I guess, physical demand for housing, immigration is not the biggest source, but it's the most volatile part. And I think that's what throws a lot of our ability to invest in long-term thinking and construction sector capability and capacity. Because things go up and down, we get big booms and big busts. And I think that's the bust that we are about to see in the construction side, that there has been so little population growth in the last 2 years. Do we actually have enough people with very high incomes to be able to buy these houses? The answer is no. And that's why the construction sector is slowing down. Not because there is not enough need, it's because there is not enough need or demand from people with sufficient income to be able to buy these houses.
So effectively, it's the wrong type of housing for what we need at the moment.
Yeah, I think there's massive affordability constraints for a lot of the housing need versus housing wants. And so most of the housing supply is on the want rather than on the need, because we're not actually building a lot of affordable housing. And so that's why we're seeing the waitlist for public housing grow so fast. That's why we're seeing the amount of money that we spend on accommodation supplement increase so much, because those who are renting are not getting any relief in terms of additional supply. Vacancy rates are extremely low across the country, with probably the exception of Auckland. Auckland's been fascinating because the closure of the borders has really hurt Auckland, because we, on net, lose people to the provinces, and most of the population growth is from international migration. So without international migration, Auckland's population has actually been shrinking. And so rents are actually, relatively speaking, not increasing so much here. So a roundabout way of saying that we're kind of in this very strange environment where I think immigration is one of those things, when it comes back, it could sort of, feed into the housing market. Even though it's not the only driver, it does increase physical demand, and we still have a shortage.
We've talked around the idea of affordable housing there quite a bit through the thread of the conversation. I just want to, a couple of things I want to throw at you there. Like, what is affordable housing? And secondly, in terms of renting, do we need more work on rental tenures? I mean, obviously, a lot of people are renting for a lot longer, some people for their whole lives now. Do we need longer rental tenures? Is that still a problem in New Zealand?
Yeah, good question. So in terms of affordable housing, the standard kind of definition is if you're spending more than a third of your income, you probably don't have enough on other things. So your lifestyle is affected because of housing poverty. And, we know that large numbers of New Zealanders are spending far more than that. And as a result, we're spending so much money on housing subsidies, right? So in total, across all the different types of housing subsidies, we spend about $4 billion a year at the moment, with no end in sight. That keeps increasing really fast. And incidentally, I think that's going to be one of the big challenges of our aging population. People think it's going to be health and superannuation, but it's really the supplements for housing that's going to blow everything out of the water. Because we have so many people who are now retiring with mortgages or renting still. So affordability is a big issue in that I think there are some big consequences in terms of people's ability to have security of where they live, being able to put down roots in their communities, all those things that we know about. So we're trying to do more with the subsidies, but they're not enough, because if you don't actually have more supply that's matched with the subsidies, then all you end up doing is paying more for people to have really terrible housing conditions. So I think there is that. On the rental side, of course, we've had the reforms of the Tenancies Act, which I think has improved things a lot. Could it be better? Of course. I think one of the innovations that we have seen in the UK and Australia recently, and since the Second World War in Europe, is the role of institutional landlords. Now, institutional landlords are different in that they actually want you to stay for as long as possible, because they want low vacancy and known returns on rents. So build to rent, as it's called in the UK and Australia, I think is something that we should try and encourage in New Zealand, because it offers 10-year security and also certainty around how much rent you pay. So quite often you'll have a fixed rent for a certain period of time or a fixed increase for a certain period of time, then a market reset. So it gives you that ability to plan rather than being left at the mercy of whatever is happening. Should we make that more standardized? I think culturally it's going to be hard in New Zealand, just because so much of our rental stock, almost all of it, is held by what you'd call, the mum and pop, very colloquially termed, landlords, and I term them accidental landlords. They're not really in the business of being a landlord. By and large, these people are in the business of capital gains. Tenants happen to be a bit of a nuisance on the side.
Indeed. I just on that affordability issue, interesting thing to me is, so a third of your income going on housing, that's kind of your measure you're talking about there. So a lot of people would be spending more than that, especially with, I guess, some homeowners, because mortgage rates have been rising, but obviously a lot of renters would be, probably most of them, in fact. How do we, I mean, it's a bit of a how long is a piece of string question, but how do we resolve that? Do prices need to fall further? I mean, there's been talk this week of rent freezes. I mean, do we need to look at things like that?
Yeah, look, I think New Zealand is not ready culturally for those kinds of things. We had a pretty sharp reversal from price controls and things. I think we all have terrible associations of those things with Muldoon and the Muldoon era. Nobody wants to go back there. So I don't think you'll have a lot of social license to do that. But long term, I think the solution is really that targeted supply towards that different parts of the continuum. In the short term, we already have the mechanisms in things like the housing subsidies that we give. I think the subsidies need to be relooked at and updated. The current accommodation supplement is referenced to rents 6 years ago. I mean, that's just ridiculous. We need to have indexation that happens every year so that we know that accommodation supplement is really expensive, but it provides real relief to people who need it. And we should make sure that it's generous enough to give people that ability to actually afford to live where they want to.
This is a fascinating conversation, Shamubeel, and we could probably go on and on, but I'm going to wrap it up by asking you for your biggest concern in the housing market at the moment. And I guess also I see some optimism in what you've been saying today too. So what excites you the most about the housing market at the moment?
Do you know what excites me is a consensus that there is a problem. That's a fantastic base to build from, because we can argue about the detail of the solutions, but we're not arguing about if there's a problem.
Which we were 10 years ago, right?
Totally. Yeah. So when we were Generation Rent, I felt pretty pessimistic, because it felt like we were, it was pushing the proverbial up the hill. It just felt like everybody was still kind of deciding whether or not we wanted to be involved in the solutions. Whereas if I look back on our list of 10 things, it feels like we're making progress on all of them to a certain extent. Maybe not fast enough, maybe not bold enough, but progress is progress. After 40 years of pretty much apathy, this to me is really, really positive. So I feel very optimistic about where we are, that actually we are arguing and discussing solutions. And, if some of the consensus holds, like on the MDRS, we saw National and Labour actually working together to put together these policies around medium density. Those are really good things, because it means that some of these changes are enduring.
Well, look, that's a great note to end on, a bit of optimism. So, look, thanks a lot for your time. That's Shamubeel Eaqub, who is an economist at Sense Partners, and I'm Gareth Vaughan of interest.co.nz with another episode of the Of Interest podcast.